Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running your small business. So today we're going to look at what expenses you can claim against your income for your self-employed tax return. Before we talk about that, if I could please ask you to take a moment to subscribe to our channel. That way you will easily be able to refer back to this information if you need to, as well as finding other information that we have available on a whole wide range of topics, all aimed at supporting you in your self-employment. So back then to what expenses can you claim against your income for your self-employed self-assessment tax return. So today we're specifically talking about sole traders, and we're looking at what expenses you can claim against your sales to actually come up with your profit. So of course your profit is your turnover, your sales, your income that you've received from your customers or your clients, taking off that your expenses, the costs that you pay out or that you incur, because some things of course aren't a physical cost. Such as mileage for business use of a personal vehicle, for example, isn't a physical cost, but a calculation. So that's what we're going to look at today. We've got some broken down aspects of this in separate videos. So today we're just looking at an overview to give you an understanding of what you can claim to come up with an accurate profit, which of course is your taxable income. So it is important that it's accurate because your tax liability is based on it. So if you don't claim everything that you're entitled to claim as an expense, then of course you will be paying too much tax because your liability, your profit will be overstated. So therefore your tax is based on that, and that will be overstated, and national insurance too. If you claim something that you shouldn't be claiming, then of course your profit is understated, it's lower than it should be, and therefore your liability will be less than it should be. Now of course that is really important that it's accurate, because nobody wants to be paying tax that they don't need to be paying. But if you're inadvertently underpaying tax because you're claiming something that you shouldn't have claimed, then at the point that HMRC pick that up, of course, then that could incur penalties as well as having to pay the tax. So the important thing is to make sure that the profit is accurate, and that means accurate liabilities, correct payment of tax, and then nothing to cause us any sleepless nights worrying whether we did everything correctly. So in order to correctly assess the profit, we need to have accurate income, sales, turnover, different jargon, same meaning, and we need to accurately calculate the expenses. So in terms of what those expenses are, basically anything that has been wholly and exclusively incurred in the running of your business. So some things are easier than others to determine, especially as a sole trader, where potentially you're working on your own. You may be working from home. You may be have some personal use of some of the things that you're also using for work. So things like your cost of sales, your purchases, things that you are buying to be able to provide the service that you're providing, or to make the products that you're selling. Of course, that's quite an easy one. Those are, of course, incurred exclusively and wholly for the use of your business, so they are allowable expenses. So really the thing to think about is, if I wasn't running this business, if I wasn't working for myself, would I still have incurred that cost? So let's take another thing. Let's take your business insurance. Well, no, you wouldn't have incurred that cost So that clearly is exclusively and wholly for the business use. So that is fully allowable against your income. So things where it obviously could get a little bit more tricky is things like perhaps you have a landline that you use for your business and for your personal use. So in this scenario, then it's still okay to claim the business use element of the costs that you've incurred, but you need to be able to apportion the amount for personal and business use and only claim the amount that's for business use. So if you have a landline anyway, then of course you would be incurring the line rental cost. So in that scenario, you could have an itemized bill and show the business use separately. Perhaps you don't have a landline for your personal use, and you specifically had that landline installed for your business use, then that is of course then wholly and exclusively for the business use. But of course, if you're, because you've got it, then using that landline for personal use, you must make sure that you're making an adjustment and not claiming anything that you've used for your personal use. So an easy way to make sure that you aren't missing any costs, of course, is to use a Making Tax digital software, which allows a bank feed to be connected to it. And then even if you aren't actually using the software, you still would be going through your bank statements. And if you're paying everything through your bank accounts that is for your business use, then this is a good way to make sure that you don't forget any costs. And there can be sometimes people want to always err on the side of caution, but err with a little bit too much caution, and because they're not sure whether they can claim something or not, they're not sure of the rules surrounding something, then they opt to not claim it at all. But if you're not sure about anything, there's a whole host of information available on specific expenses that you can and can't claim on gov.uk. So simply, if you're not sure, don't not claim something because you're not sure. On the opposite hand, don't claim something because you think that it is okay. Always be certain that you should be claiming something that you are claiming. So the things that we've looked at so far are actual costs, so things that you will have seen going out of your bank account, or perhaps if you've paid cash for purchases or materials, then you'll have the physical receipts. So where people can get more confused, where things can get a little bit more complex, is where there's a definite personal use element where you're sort of sharing, you and your business, which of course, as a sole trader, you and your business are legally the same entity. You are sharing the same resources. So let's take a vehicle, for example. So we've got another video where we specifically look at the business use of the vehicle, but we can either claim all of the costs of the vehicle and make an apportionment for personal use. Now, to do this, you need to be able to show all of your mileage records. That's not just the business use. You need to be able to show this is how many miles I did for business use. This is how many miles I did for personal use. This is the total amount of the costs. And this is therefore the percentage that was business use based on the percentage of my mileage records. Now, depending on the amount of personal v business usage and the volume of the costs incurred, that obviously can be a lot of effort incurred in keeping those costs, but also keeping the mileage. It's quite common for people to slip and forget to keep the mileage. Of course, if you're using software, a lot of the softwares do have an app which will allow you to track your mileage, but still it is dependent on that information being accurate. So sometimes It can just be easier, and sometimes it can be more tax efficient as well to look at what's called simplified expenses, which is just claiming the mileage for the business use. So you don't keep your records of your separate your servicing, your tires, your fuel, and what you do is you keep a record of your business mileage, and you claim that first 10,000 miles at 45 pence a mile, and that is covering the cost to the business of not only the fuel that's used, but the wear and tear on the car. So it's one or the other, as we talk about in more detail in another video. So that's how we overcome that aspect. So another aspect can be if you're working from home, perhaps you are a service provider and you're carrying out admin services at your home address. So again, a common question is, I'm using my home, I'm using my electricity, cost of fuel is going up, and cost of energy, sorry, is going up, cost of fuel is going up too. The cost of energy is going up. How can my business be claiming for the use that it's making on my home resources? So again, we're in a scenario where your home is used for your personal use and for your business use. So again, we can either keep all of the costs. So we're looking at the utilities, any interest on your mortgage, interest only, note, not capital, rent payments if you're renting, add those all up and then work out the proportion of the business use of the home. So again, this can be quite complex. If you are working full-time at home and you have one room set aside for business, that can be a little easier because you simply add up how many rooms are in the home and apportion it that way. If you perhaps use a spare bedroom, but you're also using it as a spare bedroom, then you need to then further apportion for the actual percentage time used for business. So again, this can become quite complex, and you may wish to refer to simplified expenses, which means that you can claim a set amount per week or per month to contribute towards the expenses. Now, currently, if you're working full-time at home, more than 101 hours in a month, then that works out to be £6 a week that you can claim as a fixed rate, and then that saves you having to add up all of your bills and apportion the time. So again, we talk about simplified expenses more in another video, but sometimes it can be more tax efficient to claim the simplified expenses. And sometimes there may not be a lot in it in how much you're claiming as an expense when you apportion, or whether you claim simplified expenses, but it's simply factoring in the effort involved, because remember that your time is valuable. And so if, for example, you are apportioning the costs because you want to have the exact amount claimed, but that works out pretty much the same as claiming the simplified expenses, then it's no doubt taken you a lot longer, so therefore you are worse off for claiming the exact cost. Now, just one last thing quickly on simplified expenses or apportioning. Once you have decided and claimed that way 1 year, you must be consistent. So you can't each year see which is the most tax efficient for you. You need to, at the start, give some thought to what's going to work best for you. Are you going to be able to keep the records fully to be able to do full apportionment? Is it going to be more tax efficient for you to do simplified expenses? And once you've decided, then you need to stick with what you've done. So of course, we're just coming up to the tax return deadline. So people that have left till late in the day will be looking at now submitting their self-assessment self-assessment tax returns. And again, just a reminder that we're talking specifically today about sole traders, and so the expenses, in summary, that you can claim are anything incurred wholly and exclusively for your business use. So if you didn't do that business and you wouldn't have incurred that cost, then there's a good chance it is wholly and exclusively, although there is an element of expenses that you are able to claim towards any sort of shared resources, that any of your personal resources that you're using in order to facilitate your business. And of course, the biggies are vehicle use and use of home. So we've covered those briefly. So it's really, really important, of course, once you understand what you can and can't claim, it's really important then to see how throughout the year we make sure that we keep the records that will mean that we can evidence all of the expenses that we have incurred. Because of course, this is another important aspect, is that we need to be able to, in an inspection from HMRC, we need to be able to show, yes, I've claimed this expense, I incurred that cost, it was wholly and exclusively for business, and this is how I can demonstrate this, and here is the receipt or the invoice that that proves that the cost that I have incurred. Now, of course, if you are a VAT registered business, you're operating as a VAT registered business, then of course the rules surrounding the evidence that you need to keep are quite sort of up another level, because you need to be able to also, as well as demonstrating the wholly and exclusively for business element, you also need to be able to evidence the VAT that you're reclaiming. If you're not VAT registered, then you can you don't need to have, for example, a full VAT invoice, but you do need to be able to evidence the purchase that you've made. So, for example, if you go to a supermarket and purchase ink cartridges for your printer that is exclusively used for your business, then of course that is an expense that you can claim. But it's no good to be able to just demonstrate on your bank statement that you have spent money at Sainsbury's, because of course you could have gone in and bought some groceries. You need the actual receipt that evidences the actual purchase that you made. So, and again, there's a little bit of judgment that can be involved here. So in that scenario, of course, it's critical that you have the invoice or the receipt to evidence, because there's so many other things that you could have purchased in the supermarket. If, for example, you went to the post office to purchase postage, and you send a small parcel, which is obviously a set amount, then it's really, you should have that receipt to evidence what it was that you purchased. But of course, there's less other things, although of course, as the post office, for example, diversifies more and more, it becomes more and more important to keep these receipts. So what you need to think of is, imagine yourself in an inspection with a HMRC officer, and they say, how can you prove that this was for business use, and do you have that evidence? Do you have sufficient evidence? And if they queried that, well, how, could you have purchased this? How can you prove that you didn't? Do you have that evidence? So that's a good, if you think from the other side of being in an inspection, and do you have the evidence, then if you think of that throughout the time, then you will always be certain that you've got the right information. So hopefully this helps you to understand the expenses that you can claim as a sole trader on your self-assessment tax return. If you found the information useful, then please do like the video. We are seeing more and more questions, and it's harder to prioritize which is going to be the most useful for people. If you like and subscribe our video, like our videos and subscribe to our channel, then that helps us to understand which areas are proving the most useful for people, and to be able to produce more answers on those on that information. Thank you very much for watching. Goodbye.